Sandeep Bhatia, Managing Director and Head of Equity India at Macquarie Capital. Sandeep, thank you so much for joining in on our special conversation today. You know, we're tying up celebrations for India's Independence Day with the concept of freedom and financial freedom, and that, you know, that's what we hope to bring to our viewers. So let's just start with your thoughts on that. What does freedom mean for you? What does financial freedom mean for you?
I think freedom is the choice that one has to live one's life the way one wants to, with the ability and the resources also to develop one's own capacities. And financial freedom to me is essentially about knowing what your responsibilities are to yourself, to your family, and to your community, and fulfilling them financially and also by your own service. So there are multiple aspects of freedom and multiple aspects of financial freedom. It's not only about oneself.
Sandeep, before I come to your financial philosophy and your freedom portfolio, what does a freedom portfolio look like? I have to ask you about the big question weighing on markets' mind, and I think across the world, is what's going to happen at this Trump-Putin meet tomorrow. It becomes a huge flashpoint, you think, and could either lead to a solution which then affects India positively or negatively, one way or the other?
I think one event can be seen to be important in the near term, but may not be as important if you take the slightly medium to long-term view. My own view, given the two personalities involved and given the entire background of what events have happened, I was just listening to President Trump. He said that even after this meeting, if it goes well, there will be a second meeting in which some European leaders and Zelensky may be there. So all told, this is not the one and final conclusion. It will be too much to build into that one event, especially given the two strong personalities involved here. So I think both President Trump and Putin would probably try to get the max out of each other. And in that kind of situation is actually not indicative of a good outcome. That's what I would say.
Sandeep, actually, just trying to think of it, if it is a positive outcome, then there will be hope of some good things happening from a tariff perspective for India. But that will be a hope at best, right? We still, I mean, yes, it lays the ground, but not necessarily a done thing. But if it's a negative outcome, then the market will probably be quick to price in the belief that tariffs might actually stay higher. So is the risk reward for this meeting as well skewed towards the downside?
I would agree with you. I think there are multiple aspects to this. I don't know whether this is the right forum to discuss this, but between President Trump and Putin, essentially the question is whether there will be territory swap. So the regions of Ukraine, which are currently under Russian control, whether Putin can hand over some of that to Zelensky. And Zelensky has clearly said that there's not going to be a territory swap. So I really don't see any ground, any reason for this kind of a meeting to really succeed. And after that, as far as India is concerned, I think the Russian oil situation and the higher penalties on India is just one reason that these have been put in. I think there are underlying reasons of what happened between India and the US around Operation Sindoor and so on. And those are the real issues rather than the Russian oil import issue, which has actually happened within all the sanction rules, and it was also done with clear approval from the US. So I think there are multiple layers to both parts between Trump, Putin, Zelensky, and between India and US. So to think that everything will just fall into place overnight, I think is expecting too much.
Sandeep, the other thing is the options. I mean, I'm approaching this completely from how the markets perceive it positively or neutrally or negatively, right? The result of being pushed by the US for countries making pacts with other countries, right? And it's happening across the spectrum. It's not just India, which is now with China, with some of the others, the call between PM Modi and Ukraine, or so on and so forth, or some of the other countries doing that. I mean, how does the market perceive it? Does the market think that, okay, this opens up other avenues for every nation, and therefore the impact of tariff, which was anyways 2% for GDP for India, will not be terrible save for a few sectors. Does the market look at it that way or not quite?
I think if you look at what the market thinks, one is the near-term flows, which have been holding up the market very well. We all know how the SIPs have performed, and they are at an all-time high as of last month. So that's what holding up the market. As far as earnings are concerned, the market definitely knows that there's earnings disappointment which is coming through for this year. And even despite that, the market is not coming off, essentially because it's a technical liquidity-driven situation. As far as market's own estimate of where GDP is and how growth will be impacted because of the tariffs, I think the worst case scenario will be maybe around 30 to 50 basis points of GDP growth in the near term. But the real issue is not the near term. The real issue is what it does for countries and what it does for India in terms of where it looks for trade and where it looks for its own defense capabilities. So these are actually things which happen over a longer term. To my mind, near term, the market will definitely be driven by flows. Longer term, these issues will need to be emerge with more clarity than they are right now before any real pricing of these events can be done in the market.
The other big factor and the movement, I think, which will be watched very closely is India's greater or larger participation in the BRICS context. You're already seeing that news just a few minutes ago about border trade opening up between India and China, flights now beginning between India and China. That's been happening after a really long time. Of course, the Prime Minister's upcoming visit, etc. How do you see that being digested by the markets as we go along on that path, perhaps?
See, I think the market would like that. Clearly, we don't have to we don't have to forget what India's longer-term geostrategic issues are. We are the only country in the world which has two nuclear neighbors along its land borders, and both of them are hostile, and both of them can collaborate with each other. So these issues are much more longer term. The good thing about China is that it is a large economy, it is a growing economy, and it has a lot that India can gain from trade from China. I think the visa opening up, the flights opening up is also good for tourism for India, which is seen as one sector which can counterbalance the effects of what's happening on the US side. The real issue, I think, for India and for Europe and for China and for Japan, all the large economic blocks of this world, is whether they can evolve into a trading relationship between each other, which is not necessarily driven by what the US has built till now. Now, that's not going to be easy because there was a World Trade Organization, there was a scenario of most favored nations. Most favored nations mean that if I trade with country A and I charge them a certain proportion of duties, the same proportion of duties, same percentage of duties, I'll charge to every other nation. And that means that there's a level playing field as far as trade is concerned. Clearly, what US is doing is creating separate duties for each country. And that is the real challenge. And those are longer term challenges, and those are actually not currently being priced in by the market.
Okay, Sandeep, let's come from the macro to a bit of the here and now. We have a fairly clear picture of what's happened in first quarter for Indian companies. What is your assessment over there? Have there been some good, outstanding kind of numbers, at least in BFSI, that you've liked? We looked at Muthoot today. In the past, HDFC Bank, ICICI Bank have also not been bad at all.
I think BFSI has been okay. Outstanding is maybe a strong word. I wouldn't want to use that, but yes, it's been okay. The real challenge is what's happening in the slowdown on SME side, the portfolio, whether it's generating bad loans. And clearly there are parts of India, in South India, where these issues are real. There is an ongoing slowdown in the SME, MSE side, and that will have a significant impact on portfolios for the rest of the year. So to that extent, I would think the good part is that we'll probably see one more rate cut coming in for India. We would see at least a 50 basis point rate cut coming in for the US in the near term. So the rate cut scenario in the pre-Diwali would be favorable both for India and for the US.
Okay. Pre-Diwali rate cut favorable for India and the US. Any one sector that you think has, that potential right now, Sandeep, before we let you go? We didn't have, and which you would add in your freedom portfolio, perhaps?
Yeah, I would think, a longer term, which is if you take a 2-year view, I would actually think that auto sector is good. We are going to be in a low interest rate regime. There's also going to be the pay award for public sector employees. So the government is going to constitute the new pay commission. It will give its award maybe next year, June, July 26. And the payment of it will happen with arrears. And once the central government gives a pay award, it is also followed by state governments. It's also followed by other institutions like schools, which also follow the pay commission award. So there would be a big bump in terms of arrears and payments of higher salaries going to civil servants and going to state bureaucracies. And that would be very positive for consumption. And with a low interest rate environment, I think actually the auto sector could benefit. It's worth looking at Mahindra, which has done well and would continue to do well. It would also be interesting to look at Hyundai. So these are some of the stocks which could definitely do well over the next 18 to 24 months.
Okay, Sandeep, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. And to you and yours, a very happy Independence Day.